Hello, everybody. This is Joshua Hayes at BigWaveTrading.com coming to you with the January 26th stock market wrap up for you to use tomorrow and all the way through Friday because right now it just doesn't matter. Here we'll first start off with the S&P 500. As you can see today, it had an up day on lower volume. Now, the lower volume isn't that bullish. However, the price action isn't that bullish. As you can see, it opened at 832, managed to get all the way up to 852, had a good intraday session going on, and then it pulled back near the ending, the last 2 hours. Closing up only, going from 832 to 836, closing up only 4 points. Excuse me right there. And then so that's just not that bullish. So overall, the trend is still going nowhere, and it's been like that since right through on the breakdown attempt on the 14th. Since then, as you can see here, it's gone negative 0.85%, just kind of flatlining. Every time it looks like it's about ready to break down and go lower, like here, it ends up going sideways. Then it breaks down. Oh, but it's going to definitely break down here, right? Nope, just going to go sideways. So the market's kind of in no man's land right now. It's in a downtrend on the long-term, intermediate term. Sub-intermediate term, though, on October, let's just like go here to here. Let's go back 2 days. From 1027 to 126, 3 full months, the SP 500's moved negative 1.45%. Very lateral market. And even right now, it's very lateral on the short term. So it's obviously going to be hard to make money right now in the short term. The stocks that are going to make money are your long-term positions that then either continue to go down or continue to go up during this time. Or you seriously have to get kind of lucky right now, or else it's going to be hard to make money. You know, day traders, it's a day trader special right now. If you buy support and sell resistance and short resistance, cover at support, and keep on doing that, you're probably doing okay. But soon this trading range is going to stop, and we're going to go up or down. So just be ready for that. Dow Jones Industrial Average, you can see same thing. Lower volume today, barely over the 50-day volume average. Still nice to see it doing like that, but still lateral just isn't going anywhere for a long time. And let's see where it's going from October 27th to now. October 20, negative 0.73%. So as you can see on a 3-day, it's just going nowhere. So the market's just flatlining kind of. And let's look at the NASDAQ. And as you can see on the NASDAQ, once again, higher day, lower volume. You can see it opened up at 1479, got all the way up to 1514, came all the way back down and closed at 1489. So that's why you got that big tail at the top. Shows that is pretty weak session, that they basically bid it higher and then sellers took control near the end of the day. As you can see, kind of lateral for the past 5 days. 1, 2, 3, 4, 5, 6, 7 days. So the past 7 days going nowhere. And going back out to October 27th to now, as you can see, let's go up to the 27th. Negative 1.09% in 3 months. The market is flatlining. Still, obviously, with the slight downtrend, we're obviously getting more shorts than longs. Let's go to the S&P 600. Take a look at it. Up once again 1% today. You can see the tail and everything. Let's do the October test of the 27th to now. Negative 1.08%. Just not going anywhere. And then next, let's look at the New York Stock Exchange. And you can see this should be the flattest of them all, I would assume. Yep, from 1027 to 126, just a 0.93% gain. Look at that bar right here going sideways, completely flat. Just not a bullish situation overall, but not bearish. The bulls can say, well, it's holding in the November lows, but you know what? It's holding in the November lows, but it's not rallying on heavy volume, and actually, whenever it falls back, volume picks up. Here's the NYSE. You can see all the red bars here, the big red bars here, and then the 3 big red bars following the very first up week in early January. Since then, it has been nothing but selling. And now let's look at the NASDAQ weekly. You look at those 3 heavy distribution weeks that followed that one low volume bullish week. Let's look at the Oh, yeah, that's right, because the volume doesn't work. Thanks, Telecharts. S&P 500 should be the exact same way as New York Stock Exchange. Yes, and now let's look at the Dow Jones Industrial Average to give you a long-term look on that. And as you can see here, also 3 big red bar days and 2 huge red bar days compared to that up week. So they've definitely been selling the Dow Jones Industrial Average stocks. About the only thing I can see here, look at the big tail there, the big tail there, big tail there, big tail there, and all the other tails here. That means the Dow Jones looks like it's trying to really hammer out a bottom. This looks like a hammer here. That looks like a hammer there. If you know what a hammer looks like, you can now hold it up sideways and be like, oh, yeah, that's what it looks like. Now, let me go look at the NASDAQ, see if it's hammering out a bottom quite like that. Not quite like that, but you can see all the tails, all the bullish tails. It's trying to hammer out a low around this area. So, short term, that's probably why we went from 13 longs to only 5. Now we're back up to 8, and all 8 look like they're holding in there. The sad thing is that one looked perfect, and now it lost its perfection, but then it looked good again, but now it's lost its perfection again. So all this beautiful max green and green that was on the chart now is just a normal yellow, so that kind of stinks. Let's see how much time we have. Oh, good, 4 minutes. So that's the only disappointing part. However, like I said, 5 longs to 8 longs. But during that exact same amount of time that we've gone from 5 longs to 8 longs, we've also gone from 35 shorts to currently 41 shorts after today. We had 1 full cover, and no new short, but we did have a new long. That new long is a very pretty chart. However, the base isn't long enough. But everything else you see, BOP volume, I can't say it out loud because it's the free portion. Very beautiful. I can't deny it. Excellent BOP, excellent volume. Base too short, though. So I can't say go for it, everybody, because that would just be wrong to say that. Now let's look at commodities because we always do this. Let's just keep the routine up. Oil continues to hold in around this 40 area to 50 area. I thought it would personally be in between 30 and 40 for a while, but it turns out it's going to be 40 and 45 and 35 basically. But I'm pretty sure we'll see it hit 50. Even though I'm not going to put my money in that, now that it's retaken the 50-day moving average and it held on to it today, I could see it going higher. I don't know if it'll make it to the 200. Obviously, by the time it does that, it'll probably be around 70. I don't think I can do that, but we'll see. Now let's look at platinum. Platinum still holding in, still looking good. Had a bearish intraday session, but still a bullish close compared to open. So you got to take that as what it is with all the other bullish days and say that that's a good deal. You got silver, once again, weak intraday session, but it's a smaller session than the day before where it was up 4%. Still holding in there, still good enough. Relative strength line hit another new high. You can't really complain. Gold kind of came back a little bit, but still open at 898, closed at 902, but got all the way up to 916 intraday. Still, the trend is up. It's above the 5200-day moving average since the November lows, as you can see with all the, let me get that C off there, with all the tails that indicate hammering out lows and all the open bodies in the candles. That means weak open, strong close. Very, very good. Very, very bullish. And then as you can see with all the tails, couldn't hold the 50, but tails on the way down, held the 50, broke back above the 200, then had amazing follow through of 5% on 123. So it's time to be long gold. It's time to be long silver if you want to be long silver, but not loaded up because it's not over the 200 yet. And it's time to be long platinum, but not loaded up. And now for gold, you should probably be loaded up if you were in the futures by now. And now just see how it acts. You either cut your loss with the pullback to 200, or we watch and see how far it could possibly run. There is one great long chart in the gold sector that I want to show everybody, but I'm running out of time here, so I'm only going to show the subscribers in part 2 as we go over the longs and our new long. And in part 3, we'll look at the shorts, and I'll show you why we can't go short anything right now and why we actually do need a rally. We need a rally to make money on our longs right now. However, even though we have a lot of shorts, they're all way extended from the 5200-day moving average that a pull up where our longs make money would actually be a good thing and put them in reshorting positions and would make a lot of these stocks that we're watching potential shorts. So this is Joshua Hayes at BigWaveTrading.com. I hope you all have a wonderful week. I hope you had a great weekend. Let's go out there and continue to make money. I now am in the green for the year. So, woohoo, I guess. Okay, aloha.